Well, BCE stock is trading slightly higher today after the company topped expectations in the third quarter, with the telecom giant adding more than 224,000 wireless customers in the quarter. BCE is the parent company of BNN Bloomberg through its Bell Media division. Well, for more, we're joined by the president and CEO of BCE, Mirko Bibic. Great to speak with you again, Mirko. I wonder, last time we spoke, you talked about expecting more wireless customers to be added in the next quarter, and part of that potentially coming from switching. We had been talking about the Rogers outage, and you thought maybe you might be getting some customers coming over from Rogers. How much of the strength that you saw in this most recent quarter came from that sort of switching, do you think?
Hi, Jacqueline. Well, thanks for the question. You mentioned in the intro the 224,000 or more than 224,000 net subscriber additions in mobile, and that is a record for Bell Mobility. So a pretty impressive showing in Q3 by the team. I did mention back when we last spoke that we were gaining in the switching market. In other words, customers who want to switch from one carrier to another. But the strength that we're seeing is pretty much across the board, and is not only in the switcher market, and it wasn't kind of a one-time event in the aftermath of our competitor's outage. We've seen the momentum continue in August and September, and there's a lot of factors there: immigration growth, the 5G upgrade cycles. Customers are switching to or moving up to 5G services. Customers are buying additional devices, and all our distribution channels are really working. Retail stores have come back, and we're seeing a lot of traffic, and our digital channels are so much better than they were in the days prior to COVID, given all the investments we've made to improve those channels. And of course, on the revenue side, we've seen an uplift in roaming as well. So everything's kind of working, and the industry is benefiting overall as well, actually, I'd say.
On the wireless competition side, I'm curious what you think of Quebecor, because there is the potential that Quebecor is going to be buying Freedom Mobile, but also just eyeing the wireless business nationally. And what sort of impact do you think that could potentially have on competition in the space and on your pricing power?
Look, we've been spending the last couple of years getting ourselves ready to be more competitive than we ever have before, and you're seeing it kind of right now in the results. We just talked about them, the record mobile phone nets. What we didn't talk about yet is the record subscriber additions we've had on our fiber internet network. So we had 95,000 net new fiber internet customers, which also is a record for Bell. And that just kind of speaks to the benefit of the massive investments we've made to upgrade our wireline networks to fiber, and of course our wireless networks to 5G, which we've talked about. So going back to your question, what that does is it prepares us to compete against anyone, anywhere, and we're seeing market share gains everywhere we operate against most of our competitors, and of course we're doing rather well in Quebec as well. So I think we're ready.
I'm curious, the media division of BCE, so Bell Media, revenue came in flat. That was below analysts' estimates. But the media division received a lot of attention over the recent quarter after CTV's national anchor, Lisa LaFlamme, left. And I wonder, from the investors' perspective, what sort of business impact do you think that could have, did have, or could potentially have, perhaps on the brand, or whether it's on viewership? The media division, of course, really relies on viewers to get those advertisers on board.
Yeah, so on Bell Media and its overall performance, I think first important thing to point out is we are in an ad recession across North America, and you're seeing our domestic competitors certainly are feeling the impacts of an ad recession in the French language market and in English Canada, and we're seeing those media companies in the U.S. that are heavily reliant on advertising revenue feeling the impacts of an ad recession. So I'd start there, and then if you compare us to our competitors domestically, both in terms of ad revenue share, viewership share, and subscriber revenue share. We are gaining against all our competitors across those three things. So our subscriber revenue is actually up year over year. Our overall revenue, as you said, is flat compared to our major competitors, are down very significantly. And on the earnings side, the impacts we're feeling from the ad recession are significantly better or more muted, if you want to put it that way, than our competitors. So we're taking share across the board. Our sports services are still number one, and we're gaining viewership share as well. So it's difficult macroeconomic circumstances that are that you're seeing impacting the results, but much better than some of our peers, or all of our peers actually.
BCE, Mirko, pays a dividend of about 6%, something that has attracted investors in the past to BCE. Now with interest rates rising, you've got some competition in terms of bonds even. So how do you stay competitive in this sort of environment? Do you have plans to raise that dividend? I think it's around February where you might be doing that sort of thing.
Yes, I won't give guidance on that until February, and ultimately it's a board decision. But the principle we operate under is the following: we know our shareholder base rather well, and we know what they expect of us. They expect a stable and sustainable dividend that keeps growing over time. We've delivered on that promise for 14 years consecutively. So we always have that top of mind when we approach February and we need to guide to what we're doing next. So I think investors should rest assured that remains our guiding philosophy.
Okay, and Mirko, just while we have you here, we're getting set to find out what is in the federal government's fiscal update, its fall economic statement. Is there anything in particular that you'll be looking for in it?
Well, I think, in it specifically, I'd say, look, a more kind of macro level answer to your question is, I think as a country we really need to, it's a little bit not quite on point to your question, but we really need to continue focusing on increasing immigration in the country, which the federal government's already indicated it would do. So I think that's a really positive sign, and never lose sight of the need to encourage all enterprises, but particularly small and medium-sized enterprises, to continue to invest in technology and innovation, because that's how we're going to grow the economy in Canada over a very long time. So I mean that's a bit of a higher level answer to your question, but I think are the two very, very important principles to continue to sustain the economy in this country for years to come.